Now it's time we move on to our next speaker, and that is Guru Malladi. Mr. Malladi started his career with EY in 1999 after a brief stint at Standard Chartered Bank in London. And today he is a partner and founding member with EY Advisory Services in India region. He is currently responsible for evangelizing digital in all aspects of advisory business. Additionally, he is also responsible for acquisitions, new markets and new solutions to further strengthen the market leading growth. He will be speaking on how the fintech industry is reinventing financial services. Please welcome on stage, sir.
Good evening, everybody. So I think it's difficult to keep up some of the acts that we have seen, and I think Manoj has actually peeped into my chit, my chit, and he's stolen all my points. So hopefully this session shouldn't last long. There are a few things that really I wanted to share with, particularly those who are in the room with, from the banking community, as well as those who are in the fintech. And as the word goes, we are in the consulting industry. We try and see what the future holds for us, and I'll try and see in the next 10 minutes if I can do some bit of crystal gazing. What is important for us is that before we do that, I think somebody raised that question about Citibank charging money and so on and so forth. And as you've heard in the introduction, I've been a banker very briefly. Although in a country where Standard Chartered had no retail operations, but I was actually working with Treasury as well as the retail banking. So I think for the longest period of time, if you looked at particularly the private sector banking community, and this was a trend in early 2000s, the one thing that they single-handedly went about is to try and find out methods as to how we can dissuade a customer from entering into a branch, right? That was the single most important thing for any one of us, because we knew every visit costed a certain amount of money, and technology, obviously, we looked at it. I came back to India at a time when most of the banks were still running on total branch automation PC softwares, right? From there, it took almost a decade for us to move them from there to core banking, and therefore, in that sense, I would probably call myself a Gen 1 banking technology consultant in the country. But nevertheless, we all got there. And I think in the process, we relied heavily on a dumb machine, according to me. It's called ATM. And we virtually thought that ATM is going to dissuade all the customers from entering into the branch. And the bank that I used to bank at that point in time, HSBC in London, actually told me that you can no longer enter the branch where I was the account holder. And obviously, there wasn't so much of affluence in my bank account. So the reality is that I think so that was the intention, right? So now let's move forward and see what happened in the last 15 years. So there was a study done by MIT, not just in India, but world over, including India, as to how the automation really has helped in terms of either reducing the number of visits of customers or optimizing the bank staff that we have. Now, the reality is that in that period of time, the net total addition of branches was close to about 650,000 all around the world. I think the point that we really missed is that if a private enterprise or even a public sector organization, as they make more and more profits by introducing technology or improving efficiencies, we suddenly thought that somebody is going to take that money and run away. They don't do that. They reinvest in the business. They either reinvest in the very business where they made profits from, or they create newer businesses. And as a result, the whole ecosystem expands. Now, if we fast forward a bit and then look at where we are today, and therefore what is the relevance of fintech, clearly in the last 5 to 6 years, there's a significant amount of revolution that has taken place in the very concept of banking. And in India, we witnessed that, whether it's Jan Dhan or the zero balance accounts that we have in the country, so on and so forth. Now, clearly what has happened is that a threshold, which was a minimum threshold that was required for the bank to service a customer, has phenomenally dropped. Which means if we want to continue serving that customer, we need to have newer methods. And that's really where we see the role of companies which are in the fintech, right? And therefore, it's really an enabler for the existing institutions in terms of their ability to rapidly expand services beyond the definition of a traditional customer. And therefore, it is not fad, and maybe it was 5 years ago. Today, it is no longer a fad. And whenever you look at any of these trends that we really measure based on two curves, which is the hype curve that you look at from a technology point of view, or you look at Roger innovation adoption curve. Now, the good thing about fintech is because there is a lot that has changed in the ecosystem, not necessarily by virtue of fintech companies, but there was regulatory changes that have happened. There was governments who have come in and acted upon, and thankfully there was 2008 financial crisis, which really broke the relationship that existed between customer and the bank, which was trust. Now, the moment the trust relationship was broken, the customers of the banks really looking for an alternate solution, and that was just in the time where we have fintech really came about. So therefore, if you look at both the curves that I talked about, while fintech may still be on the hype curve that we talk about, if you look at the adoption curve with the millennials that we have, with the trust that's really broken, and the interventions that we have of the regulators and the governments across the world, the timing of this technology couldn't have been any better. And therefore, we do see a significant amount of opportunity, not just for the fintech players, but even for the existing organizations that we have, such as banks, who have had long-term relationship with customers and have a need to continue to build that relationship further. So therefore, it is a trend that's real. It's a trend that's dependable. And therefore, if there are any investors in the room, and if you yet haven't invested, it's certainly a good opportunity to look at some of these fintech companies. Now, for the fintech companies, I think a couple of points, and then I'll close my remarks. One, beyond a point, any company in a financial services industry cannot remain lean. So to think that today it's small and will continue to be smaller in terms of its future operations is really asking for trouble, because that's not how the financial industry works. Beyond a point, you will be above the radar, you will be looked upon by the regulators, you will be looked upon by the governments, and your portfolios increase. So a lot of those who wants to sort of remain lean will have to go through a consolidation phase. Or if you want to be prepared for that phase, perhaps it's time now you start looking at how you will fatten the base, and therefore you would suddenly become a sizable opportunity. And the second point that I also want to leave with is, in the fintech, the closest industry that comes to is retail. Because what we are trying to do is to really fragment all these complex transactions into simple transactions, and as Mr. Govindarajan spoke about, DIY kind of initiatives come in. So suddenly you will then move into the retail space. And just as how most of the insurance in the US is sold in supermarkets, it's about the time that the similar trend happens here as well. Now, the problem with being in retail is that's closely connected with customer experience. So today, if you talk to the millennials, what really drives them to stick to a particular app or a particular service provider, it's not loyalty, like as in the case previously. It's really about how much experience what kind of experience that these companies can create in terms of having that stickiness with these individuals. And unfortunately, the customer experience that the banking customers experience is not something that fintech companies can control. It will be created by the retail operators. It's the Apples of the world, or the Googles of the world, or Amazons of the world, who will create experiences for customers. And your customers will expect you to replicate those ones. And therefore, the challenge really is that you may be thinking that you're giving the best experience, but that comparison can't be the next fintech company or next financial institution, but it really has to be outside the industry, and largely it's the players that I really talked about. So those are a couple of advices that we thought it's important that I share with you. And the last thing is that I also want to leave this point. With this point, I want to conclude my remarks that disruption is a process. It's not an event, right? So there are two ways of looking at things. one can choose to say that it took Blockbuster to disappear 6 years after Netflix was introduced, or the alternate view of looking at it is that Blockbuster really slept for 6 years when it knew it was being disrupted. So for those institutions who are in the room, who are banks, been around for a long time, the disruption is not going to happen tomorrow, but it has certainly started. The question is that, can you now respond to it very quickly and collaborate instead of competing within the ecosystem? Therefore, many of you don't have to see the Blockbuster's fate. Thank you very much.